But have you seen anything in this report yet that would explain why the stock spiked up?
You will remember that Elon Musk refuted the idea, first reported by Reuters, that an affordable EV program was scrapped.
They're not going to cancel the mini car. They're committed to the mini car. The engineering's been done for 3-4 years now.
Tesla will be one of the greatest AI companies of our generation.
Lyft and Uber, they're in big trouble.
The most important thing is that they are not going just straight to autonomy.
All that and more. So let's get to it. Wait. Tesla stock is up in the pre-market over 10%? We're sitting at 159.72? I suppose I lost money on these puts. And if this is indeed the bottom, I very well could have 100 shares called away at 150. I was not expecting this.
Morgan, it's a miss on the top and the bottom line for Tesla. We're going to start crunching the numbers within the numbers, but let me give you the top and the bottom line first of all. Bottom line, they earned 45 cents a share in the first quarter. The street was expecting 51 cents a share, so a miss by 6 cents a share. Revenue coming in at $21.03 billion, light of estimates, which were at $22.15 billion. So, and the top and the bottom line, you've got a miss there. And then one other note regarding guidance on deliveries for 2024. We were looking for a number. We have not come across one yet, except for language similar to what we heard in the fourth quarter, that they expect notably lower deliveries this year, 2024, compared to 2023.
What? No. What I think Phil means to say is that they're going to have noticeably lower growth, not deliveries. They're going to have more deliveries than they did last year. The growth trajectory, that will be notably lower. Still growth.
I hate to ask a question, Phil, that has no answer that a reporter can give, but have you seen anything in this report yet that would explain why the stock spiked up almost 8% initially? Now it's down around 3%. Maybe it's just algorithms out there or some initial anything?
Not yet. Not yet, John. Have not come across something. And there may be something within these numbers that when you start crunching them and going through it and you say, okay, not as bad as we were expecting. Or when you look at the energy storage business, maybe there's some indication of some news in there that will give people some optimism here.
It's not in the numbers.
Let's start off with the long term here, because I think this is what everybody really wanted clarity on, which is their lineup is stale. Let's just face it.
Speak for yourself.
They've got a lot of competition now from all the legacy automakers and whatever the heck China is doing. What they're saying right now, while it's light on specifics here, provide some context here as to where Musk really wants to move this company over the next couple of years.
Well, I think definitively the shareholder deck in the first instance gives exactly what the institutional or Wall Street giants who had a more affordable EV at the heart of their bull thesis, what they wanted, and it gives the larger retail investor base who believe in a ROBOTAXI future what they wanted. What Tesla is outlining in this shareholder deck is completely consistent with what Dana and I reported Sunday night in the Big Take. We reported via sources that a large body of work went in at the component level and at the production process level to bring a range of more affordable EVs, not just one single model. That is exactly and explicitly what Tesla is saying in the shareholder deck.
What? Multiple models. I guess the next generation platform and the current generation platform will be swirled together, maybe not as cost effective, but effective nonetheless. This is evident as the ROBOTAXI will be coming out of Giga Austin first, utilizing the current production lines as they seek to iron out the kinks with this new generation platform. What they learned from Giga Austin will be implemented in Giga Mexico and more than likely Giga India, which will be announced maybe sometime later this year.
At the same time, they also are pretty explicit that a purpose-built ROBOTAXI is coming. You will remember that Elon Musk refuted the idea, first reported by Reuters, that an affordable EV program was scrapped or cancelled. Clearly it's not. Tesla's explaining in the shareholder deck that if anything, it's being pulled forward ahead of their original timeline of late 2025. So there's some consistency there, though you cannot hide from how terrible a quarter the first quarter was for Tesla in the near term.
Forget about the quarter for a minute, Craig. Obviously, we want to talk about what they're saying about these new vehicles. after that Reuters report, did Elon sort of scramble and say, well, did they abandon the Model 2 project and then they resurrected it after that came out? What happened?
Really scrambled and said, no, we're going to build an affordable car. This isn't something that you could just do on a whim.
So, I've been talking about the mini car since 2019, the biggest strategic bungle at Tesla the entire time I've known the company, just like more than 15 years, was when they decided to punt on the launch of the mini car.
Not sure if I like the term mini car. I don't know.
They're not going to cancel the mini car. They're committed to the mini car. The engineering's been done for 3-4 years now. The question is whether or not they're going to use the super modular approach, which could save them a lot of money. They think maybe as much as 30-40% reduction in manufacturing costs. I doubt it, but they need to just get them rolling and adopt technology over time. That's what they're going to do. They're doing the right thing. They're better late than never. It's the right thing for the company.
What do you think we can expect from the call today?
Oh man, so they're going to give it a shot to get us excited about robotics and AI on the call, right? Elon's got some explaining to do. FSD, the price was only ever supposed to go up, and we got 12,000 to 8,000 this last week, and I guess subscriptions are no longer 200 a month or 100 a month. They're really pushing hard on FSD. Personally, I'm a bear, but there are people out there that like it. We need to see attach rates go up. And for there to be some elasticity of demand here, I'm kind of skeptical, right? Everybody knows that, but they're gonna do work hard to sell that. Robotics, I don't see how you get this front center in the Tesla story. They're trying. But it's all about cars. It's about the great technology and the market penetration.
Spoiler alert, Craig. The cars are effectively robots. They've been doing robots for quite some time now. But Craig is right. I didn't expect the FSD prices to drop so steeply, but the attach rate needs to grow. The more individuals driving on FSD, the better the software gets. In my opinion, they can go ahead and half it again. $50 a month. $4,000 for FSD.
Let's talk more Tesla with Tasha Keeney of ARK Invest and Steve Wesley of the Wesley Group, also a former Tesla board member. Welcome, both of you. Steve, I'm trying to figure out how you get out of if you're Tesla, you get out of a price competition, cheaper Chinese EVs situation by, through price cuts and a cheaper car that has aspects of the current platform. What's the optimistic scenario here, Steve, that you see?
You've got to get a $25,000 car out to market. And let's be honest, this was a terrible quarter. Year-over-year decline in Q1 sales haven't happened in 4 years. Poor Cybertruck numbers, increasing competition from BYD, Hyundai, Kia, 40% decline in share price. It doesn't get much tougher than that. On top of this, Elon's putting huge amount of pressure on the big August 8th ROBOTAXI event. And my gut is anything less than an earth-shattering news on full self-driving and no 25K car could trigger a sell-off. Right now, Tesla needs to focus, and they need to get dates for bringing that new $25,000 car to market. If they do that, there's a lot of silver lining out there for them.
Tasha, your price target on Tesla is more than 10x up from here. So what is it that convinces investors in this situation that Tesla is worth that?
Let's talk about earth-shattering. I can't think of anything more earth-shattering than a car that drives itself.
Ding, 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 ding. Tell her what she's won, Johnny. Your mother. Right. When Elon Musk just haphazardly tweeted out RoboTaxi unveil August 8th, I was ecstatic. For one, we get to see what this RoboTaxi looks like. And two, there's a possibility. There is a mild possibility that we could very well get our first RoboTaxi fare on that day. I know it's a stretch. It's probably not going to happen, but there is a possibility. In the shareholder deck, they also sent a preview of what ride-hailing in the Tesla app will look like. I sure hope they open it up to questions at that event because I've got 1,000. Hopefully, a few of them will be answered.
I think that's exactly what people should be focused on. So, yes, our previously published price target was $2,000 per share by 2027. We're updating that now, so look out for that research. But we think that 2/3 of the enterprise value in that year could be attributable to a robotaxi network. To ignore this is crazy in my mind. I think that Tesla will be one of the greatest AI companies of our generation because of this. What's important now is we're hearing, that they're investing in compute. They're mentioning in the letter that, compute research is up 130% for the quarter. They'll continue to invest in compute. We want them to do that because the way that they have tuned the full self-driving neural net architecture is such that, they have this amazing data set, millions of cars on the road, over 2 million miles of driving data per day to train from. And, for a while they were compute constrained, and that's not the case anymore. So basically, new problems arise and they just need the compute to solve it. And now they're have that, or at least have line of sight to having that. I think that's huge.
Needless to say, many investors are worried about these new, cheaper models, and rightfully so. It's a huge part of the thesis. But what Tasha's saying about the robotaxi, that is why the stock should have popped and maybe even soared higher. Tesla producing cheaper vehicles, that's going to occur. That's going to naturally occur. Tesla pushing the envelope to autonomy, robotaxi, and then eventually Optimus, those are groundbreaking when regarding potential revenue from this entire enterprise. Many people are like Optimus 15, 20 years away, robotaxi 10, 15 years away. Tesla needs to focus on the here and now. F all of that. The big brains at this company, the hardworking, diligent, intellectual individuals that have signed on to work for Tesla, they can do it all. And I'm gonna tell you like this, technology is growing at a more rapid pace than it was 20 years ago. My point being is that these things may occur, robotaxi, Optimus, much faster than people think.
Let's put the regulatory approvals that are gonna be necessary aside for a moment. To even get to true autonomous driving and the realization of this on a mass scale in a way that's potentially financially meaningful for a Tesla, how much hinges on the fact that you need a lower priced car, you need scale, more vehicles on the road to fully deploy full self-driving and to fully realize software and services?
Oh, the skepticism is so thick.
Robotaxis will be the biggest deal in the world, but that's 5, 10, 12 years out. That's just aspirational talk. Tesla's got to figure out what they're doing for the next 3 years, and the short answer to that is the $25,000 car.
Many individuals on Wall Street share this exact view. What, pray tell, happens when this occurs much faster than they think?
Full autonomous driving and robotaxis ain't going to be here anytime soon.
I suppose that depends on your definition of soon.
What are your thoughts here? We know the conference call hasn't kicked off and we only just have the releases, so still a lot of questions percolating, but what's top of your mind here?
Well, I think what it's come down to is there's a question, is Tesla smoke and mirrors or is it substance? And I think the results this quarter are going to give evidence for the smoke and mirrors camp to think that this is just another car company. And I think that there is really little to be gained. I think one thing to be gained is that margins are declining, but they're not plummeting. They actually did a little bit better than expectations, still on the decline, but a little better than expectations. So they're going to survive. They got $26 billion in cash, but this ultimately comes down to is, do you believe? If you believe that the future is going to be hybrid cars and it's going to take a long time, 20 years to get to full electrification, stock's not going anywhere. If you believe that electrification, despite all of its troubles now, are going to accelerate for multiple reasons, and you believe in the concept of autonomy and robotaxi and that they're actually going to get this out, Tesla's probably the best position. They are the best positioned company to deliver on that future around autonomy and electrification. It's a big market, $2.5 trillion market. The smartphone market, $600 billion. And so I think that's what this ultimately comes down to. As the panel has said, stock it's going to move based on what happens on the earnings call at this point, some commentary. I still think the street numbers are coming down for 2024 on deliveries, so I think that could pressure the stock tomorrow. But ultimately, this company is going to survive to see this next generation vehicle and to see FSD and see the rising tide of electrification. So I'm still a shareholder. I'm still optimistic. And I think that I just believe in what they're doing from an innovation standpoint.
You and me both, Gene. You and me both. Well, let's take a look at Tesla's current influence in the market right now. Because trust, this will grow. From charging to energy storage to the vehicles, there are so many things in Tesla's ecosystem currently. Potential home HVAC. I don't even see the Tesla Electric on this mop. So Tesla's not just an automobile company. In fact, their ecosystem is intending to grow.
We reframe the kind of the investment rationale in terms of either what we're talking about a fair value, whether we're talking about growth versus something. And I can appreciate the dynamics here, which they are so far ahead. It's a technology company, but it does get back to that juxtaposition to they're not GM, but at the same time, they are an auto company. Can you talk about that multiple in Tesla and why you can stand behind that?
So I believe that this should trade at a similar multiple ultimately to Apple. I think that what they're doing around hardware and software, autonomy as a service, I think justifies that type of a multiple. And when you, right now, the multiples, stock's going down because earnings are going down. But on a revenue multiple, I think that that is justified. And so why is that justified? Is because we get back into a growth phase. Investors tend to look more at revenue growth than they do at earnings growth. And so if you, just to kind of put it all together, if you build a case that they can grow revenue at 20, 30, 40% as they come out of this trough and do a 7 multiple on that, the numbers you can get to a stock that's double where it is today.
I think the math is around robotaxis. How do you think about it? What is the model there?
It's pretty powerful. If, again, you have to believe, it's like a religion. If you believe that this is going to get out, I happen to be in the camp that I think that they will eventually get this out. I think, by the way, Lyft and Uber, they're in big trouble if, in fact, Tesla does get this, because anyway, I think that that's a whole different topic. But as far as the impact, we have, they're going to do, call it 2 million vehicles, more or less. If you get to, just for easy math, 1 million robotaxis, a lot of those are going to be Tesla owned. They're actually going to own their own taxis. Some of them will go to third parties. But if you get to that million and assume about 3 rides per day, you effectively can double the operating income. Now, I was just talking about the importance of revenue, but I think that that is the math. So that's about $10 billion per year. They did last year about $9.5 billion in operating income. That's with 1 million robotaxis. So that's a lot of them, but that's where you start to get it. The beautiful thing about it is there's a waterfall factor. As you continue to add those cars, the impact to the robotaxi fleet continues to compound.
I'm telling you, this will shock the entire stock market. Fortunately, it's going to take the stock market a little bit of time to digest this, and it's going to take some numbers. Deferred revenue from the FSD take rate, that will be a start. And then it's going to snowball. It's going to just escalate. When you factor in the ride hail revenue potential, as the street scrambles to realize how much that's worth, your boy and several others will already know.
Numbers were, I was trying to be polite. I said less than optimal, maybe less than Optimus is what I should have said. Phil kind of laid it out. What was your biggest takeaway from the quarter?
Tesla needed an adult in the room, and Musk was the adult in the room on this conference call.
I don't understand this. Elon. The stock price didn't go down because Elon was being Elon. That's the only difference. Had the stock price went down, Dan Ives would have been like, Elon should have did more. He should have did more.
The most important thing is that they are not going just straight to autonomy.
Believe that if you want to.
A Model 2, a sub 30K vehicle will be out, and that's accelerated. And that's music to the ears of the street. You went in, investors were expecting a disaster and another comedy show conference call. Instead, you actually have a pilot on the plane navigating, and it's not Ted Stryker.
First and foremost, there was always going to be a cheaper model of the vehicles. ROBOTAXI is just the first of many to come off of this platform, which has morphed into something that's a little more realistic and less idealistic. Either way, Tesla will make this work because there is more at stake when it comes to the hidden margin that these next generation vehicles will induce.
Ross, what was your biggest takeaway from the quarter, from the guidance? Anything that, I mean, investors like it, but the stock has, I don't need to tell you, has been in a rut the last number of months.
Yeah, I agree with Dan. Elon did a, Tesla, what I call Tesla Elon, which is the Elon that people like in this call, which was definitely necessary. And he certainly didn't poo-poo the idea of having a $25,000 or less model, which is irrelevant of the financial deterioration of the overall fundamentals of the company. So I think if you look at Tesla, like robots and robot cars, and obviously thinking that this is going to happen in 12 months is probably a little bit aggressive. And we all know that Elon's timelines are usually 3 to 4 years aggressive.
12 months, 3 to 4 years, 13 to 14 years, it truly does not matter. But you'd have to be insane to not recognize the rate of progress that comes with technology nowadays. Echoing Tasha Keeney, you have to be crazy not to see this potential.
If you ask the wrong question, then the right answer is impossible. If somebody doesn't believe Tesla's going to solve autonomy, I think they should not be an investor in the company. But we will, and we are.
Tesla will be the one to solve this problem, and they will reap the rewards of solving for autonomy. Whatever they have to do in order to achieve that, they will do. In conclusion, yeah, the stock popped over 10%. In my opinion, just on the mentioning that they're going to produce multiple lower cost vehicles in a combination of the next generation platform and the current lines that they possess. An accelerated timeline, to be in fact, despite a miss on the top and bottom lines. But I would say that isn't the reason why the stock should have popped. Billions of miles driven on FSD, noticeably higher take rates when it comes to the vehicles. Previewing the ride hail inside of the Tesla app? I can't wait for August, but even then, we've got the shareholder meeting before that. Many reasons to be excited about the future of Tesla. Question is, after the hype wears off, where will TSLA go? Higher? Lower? That's all I got for you today. Be easy. Peace.